Do you really need a savings account in this day and age? In order to first answer that question, we must take a look at what is a savings account. A savings account is a deposit account that you can open at banks or credit unions that allows you to save money for short-term or long-term goals. Savings accounts are separate from your other accounts. In particular, your general spending account, your checking account, which means whenever you swipe your debit card to make a purchase, that money will not be coming out of your savings account unless you have something special like overdraft protection enabled. These accounts offer a higher level of interest than certain other accounts, like for example, checking accounts. That means that the bank pays you for the money that you leave in that account. Checking accounts generally don't pay back interest, but the ones that do are generally much lower interest than a savings account. They also have a decent level of liquidity, essentially how easy it is for you to access the money in that account. Now, there is a limit to how many times you can withdraw from your savings account in many institutions. Typically, it's 6 withdrawals a month. These accounts also offer a nice level of safety because they're separate from your other accounts and because they are federally insured by the FDIC and the NCUA in the United States. Some savings accounts have maintenance fees, so you gotta be careful when selecting a savings account. It's generally pretty simple to find a savings account that will not charge you a maintenance fee, but make sure that you check before you open an account. And if there is a fee, make sure that there's a way for you to be able to avoid that fee, such as by keeping a certain level of money deposited into that account. Let's talk about your compounding period. At the end of your compounding period, the interest you have accrued in that account will be deposited into your savings. A new period will start, taking into account your previous total and the interest that you have since earned. Let's do an example. Let's say you have $10,000. You're going to deposit them into a savings. The savings account has a compounding period of a year, right? And let's say it has an APY of 0.3. When your interest accrues and your compounding period ends, you will be paid $30. That's the interest that you will make on that $10,000. Now you may be thinking, that's not a lot. Well, if you have a higher yield savings account, let's say a savings account that has 5%, that $30 becomes $500, which is a big difference. This is one of the key strengths of a savings account and something that checking accounts generally can't compete with. Note that APYs can change at any moment, especially when the Federal Reserve changes interest rates. So that sounds great, but what about the downsides of a savings account? You can get higher yields elsewhere. Now, there are trade-offs. Oftentimes, higher yield accounts have more risk or more limitations. Like, for example, investing in stock has the risk of you losing money. As we discussed earlier, savings accounts do tend to have restrictions on how often you can withdraw per statement cycle, typically 6 times per month. And finally, there's inflation, a very serious threat these days. If the inflation in a yearly period is 3% and your account has an APY of 0.3%, then you're losing purchasing power by leaving the money in that savings account, which is why paying attention to the APY of your savings account is very important. And finally, do you need a savings account in this day and age? Well, that depends. What are your goals? Are you looking to jumpstart your savings? Are you looking to save on the short term or the long term? Do you want to have a good level of access to that money? For example, like you may need to withdraw money 6 times a month or less. Well, then a savings account is pretty great. If you actually want to be able to use your money more often and you're looking to use it for purchases routinely, then a checking account may be better. If you're looking for an account that has more yield, then you may be better off with a money market account or a CD. Curious about money market accounts? Check out this video where you'll learn all about them.